What's up, everybody? I want to do a review real quick of the trade that I was in yesterday. The trade I got in was Nike. I got in late yesterday afternoon, somewhere in this bar here, like the last 5 minutes of the day. And I was hoping that at the very least Nike would pop up in the morning, which is what it did. It gapped up and then ran up a little bit. So I was able to make a quick little profit, just 20%, which is what my target typically is for these little gap up trades. The reason I got in the trade is right here, this crossover. So these two lines again, the red line and the blue line are the 13 moving average and the 30 moving average. And when the 13 crossed up above the 30, that was the first indication that the stock was headed higher. Then this gray line here, or white line, or whatever color it is a daily 13 moving average, and I'll show it to you on the daily chart. But the other thing is that price worked its way above that, which was even more confirmation that we should have higher prices. And that's exactly what happened in the morning. Let's look at it on an hour chart. So you can see here that, so again, these are 13 and the 30, and then this is the daily 30, the daily 13, my bad. And you can see here that the price has been falling down for the past couple of days. And I was just anticipating a quick little pop up, just people buying because the stock is falling. Um, there's a host of reasons to do so. One reason is that you consider the stock is now at a discount. Like Nike was just trading at $131 4 days ago, and then when it falls down here all the way down to 126, well, now you got a $5 discount on the stock. This is definitely worth at least 130. And that's what I was anticipating, is that there would be a little bit of buying and it would pop back up. And that's what happened. And then looking again at these moving averages, one of the things that I look for is for the price to cross above a moving average and close above it. That to me is a signal that there's a lot of buying going on, and the buying is sustained. It's not just like a quick flash of buying or whatever. If you look at the moving average here, this is the 13, this purple line. Once the price starts falling, you can see the price tries to get above it here and is rejected. Here's rejected. Here's rejected. Here's rejected. And the price keeps falling down. It even starts getting rejected on the daily 13 as well, right here. So what I was looking for is for it to cross above both of those and then close above it, which is what happened here. Really, you can consider it starting here, but it definitely did it here, and then it continued. And that let me know at the very least the next day we should see higher prices. I don't expect it to shoot off to the moon the next day. It could, but at the very least we should see higher prices. And this is what my typical like A1 setup is this little gap up in the morning, make a quick little 20%, and then I'm out. So that's what happened here. And let me just show it to you on the daily chart. So again, this 13 and the 30, and now you can see this is the bar that I got in on, came up, closed up above this moving average, and then the volume was average volume considering like the past 6 or 7 days. It was about 4,200,000 shares, which is about average considering these past bars here, like 5 or 6 bars back, which is good because that means that it's not just going up on a fluke, but there's some quality volume in there. Could be institutional, could be retail, or mix of both or whatever, but it's the quality amount of volume. And that is my typical setup, man. Whenever I do that typical setup, 20% in the morning is almost a guarantee. All right, so that was my trade for Friday. Let me pull Robinhood up real quick so you can see here. So I got in here at 3:53 p.m. on the 15th, which was Thursday. And I bought 4 contracts at $3 and change. That's the other thing. Because it was a Thursday trade going into Friday morning, I bought the options that expire the following week. So I bought the 1023 options and not the 1016 options. And that's just to deal with risk, because the 1016 options would expire. They have more volatility and would be way more volatile. So if the price didn't reach what I was going for, then the price of the options would fall dramatically. So by having next week's options, you give yourself a little cushion in case things go wrong. But I bought 4 of them at 310, so I only spent like $1,200, and then I sold them first thing in the morning, 9:31, in the first minute of the market being open. I already had my order set to sell at 375, which was 20%. It's a little bit more. It's like 21% higher or something. But it sold first thing in the morning, $1,500. So I made 260. All right. If you got any questions, leave them down in the comment section. Hit the like button, hit the subscribe button. I'm not in a trade over the weekend, so Monday morning I'll have another video reviewing something, and I haven't figured out what yet, but look for that on Monday. And yeah, let's just keep it going. Peace.